A very warm welcome to all those who have made the time to join us on the webinar today, sponsored by AIM Data Solutions and Global PMI Partners. And I'm pleased to say that we are joined by a truly global audience. My name is Steve Ackland from AIM Data Solutions, and I'll be the panel moderator. In the webinar today, we'll be asking the question, is data-led mergers and acquisitions the solution to managing the post-COVID-19 surge? The webinar is one of a series we are running to take a hopefully upbeat view of post-COVID-19 business activity in mergers and acquisitions. To help answer and provide insight on this question, we have an expert panel positioned in the very epicenter of mergers and acquisitions. Firstly, Robert Heaton, mergers and acquisitions consultant and expert from Global PMI Partners. Secondly, we have Terence Nichols, experienced CEO, customer, acquirer and investor at Viatech. And thirdly, Matt Smith, mergers and acquisitions technology and data belt specialist at AIM Data Solutions. The panel therefore provides a rounded group covering the customer, advisory and data technology angles. We look forward to the audience submitting questions or comments through the question and answer or chat tabs. And we'll also be asking audience views on their own experiences during the webinar using the polling feature. Following introductions from the panel, we started with the first question. And I think if we start off with a nice straightforward question around post-COVID M&A weather and what the landscape is actually going to be looking like as we go forward, whether this has been a watershed, 2020 has been a watershed for the industry, and what the view has been, whether it's going to be a buyer's market or a seller's market for the end of 2020 and 2021. And Robert, what are your views on that particular point?
Well, look, as soon as COVID-19 hit, the M&A environment, the marketplace almost died a death overnight. Lots of deals that were in process suddenly got put on hold. The deals that were going through and were close to finishing, everybody started to accelerate to get those finished and done. In the early part of COVID-19, a lot of companies started going back to the drawing board and saying, well, hang on a minute, we were going to pay this amount for the business, but I don't think it's worth that anymore. The values dropped out of the market. So they were trying to renegotiate a lot of the deals that were already in play. And from my point of view, the post-deal marketplace literally dried up overnight, and if we couldn't deliver services remotely, then everything was on hold. Now, having said that, in the last few months, there's been a shift, there's been a change, whereby there's a lot of companies out there that are struggling, they're carrying too much debt. There's a lot of companies out there that are undercapitalized. And there's a lot of companies out there that don't have sufficient cash reserves, and I call them vulture capitalists. The buyers are starting to circle. They're looking for easy picks. They're looking for businesses that are in trouble that they can buy at a steal. That's the first level of change that's happened pretty quickly. The other level of change that's starting to happen now is that, and by the way, nobody's actually completing deals per se of any sort of volume at the moment. But the other thing that's happening that's starting to be of interest is that people are then sort of saying, hold on a second, this is an opportunity to start consolidating various industries. So I had a conversation just this morning with a company that is now looking to consolidate in the transport and logistics marketplace as a way of being able to compete with two of Australia's largest transport businesses, which is Toll and Linfox. and they're looking at a way of saying, well, we can use this as a way of buying up smaller businesses, consolidating them, and using that going forward to have a credible competitor in the transport industry. So those are the things that I'm seeing happening right now.
Steve, you're on mute.
Does that help?
Sorry, yeah, picking on some of those points. Terence, do you see any particular industries as being likely to either have sort of this surge of activity that Rob mentioned about having picked up? Do you see anything in any particular industry, and if so, do you know what the drivers could be in those?
At a top level, what I'm seeing, as we all are, I'm sure, across the Western world, as such, probably other places too, is the one people that similarly are very busy are receivers and administrators. Because a lot of people, as indeed has happened here in Australia, as I'm sure it's happened in the UK, I know it has, you've got a lot of companies who got into serious trouble for all the reasons that Steve mentioned, and they're now looking for some sort of saviour. Now, that's making the administrator role and the liquidator role very, very busy. They've got to sell them to a potential buyer to claim money back for the creditors. That's one area that's going very well. On the IT side, and that's where I'm at the moment, we're seeing a lot of activity in certain aspects of the IT industry, pay area, for instance, and video conferencing was a classic. I was involved with video conferencing back in 1989-90, and it never ever reached the level of penetration that it has done today because of this very real situation. So those companies, are obviously going to be looking to not be acquired because they're getting too damn expensive, but they're certainly going to be looking for acquisitions of aligned products and sectors. So yeah, the IT industry I see as being a real potential. Again, it's the proverbial vulture. Coming back to what Stephen said, the vulture is a good analogy because people who've got cash are in a situation where they can pick and choose, and that's exactly what's happening. I'm doing exactly the same thing. We're fortunately in a position where I've cashed the business up, and we're just looking to take advantage of it. So there will be, I believe, there'll be very strong M&A activity. That's my point. And it's to Rob's point, it stopped stone dead 3 or 4 months ago because the very basis of a deal, which is the valuation, was thrown out the window, thrown out of the bucket. Nobody knew what a value was because they hadn't got a clue where it was going. But today, it's a different ballgame. People are taking, even though we've just had here in Victoria, close down for another 6 weeks, we'll get past it, we'll get through it, and there'll be activity going on.
Okay, so
I might add to that, Steve, if I
thanks,
can.
Robert. Yeah.
From an industry point of view, one of the things that we've seen happening, first of all, if you happen to be in retail or hospitality, you're dead in the water because there's no value in those industries anymore. Nobody wants to make acquisitions. What this has brought up a spike of interest in is the tech industry. So anything to do with AI, cybersecurity, video, as Terence said, and communications, networking, right? All of those stocks have suddenly become very attractive. Yeah. Similarly, anything to do with health sciences has suddenly become very focal, as is transport and logistics, because at the end of the day, we want a healthy population, we need to be able to move goods and services around the country, and we need to make use of technology to deal with whatever post-COVID-19 looks like. And those are 3 industries that are really starting to get a lot of attention.
Agreed.
Very good. So in terms of, you mentioned about how things are changing. Can you give a little bit more detail, Rob and Terence, around any course corrections then? So, you focus on the technologies which are definitely going to be potential targets for this year. How are organisations possibly engaged in that, either buying or selling? How are they possibly changing their approaches to actually understanding, for example, valuations better, or understanding the analysis of an organisation better to decide whether they do present a good target at this point?
Shall I kick off, or Terence?
Yeah, please do, Robert. Yeah, I'll follow you. Go on.
Okay. Well, look, from my point of view, first of all, there's been a need now to do a lot of M&A work virtually. So that's changed the landscape considerably for a start. The second one is that because of those valuations being so fragile, if you like, right, we're needing to get down to a different level of data. There were times previously where you could make an acquisition on pure strategic grounds, and you could go through, and if you got some value out of it at the other end, that was great. Not the case anymore. There's a lot more emphasis during the deal on now what I call operational and commercial due diligence, right? And it's, if you read the press and what people are saying, everybody's saying there's got to be a lot more focus now on the due diligence process, and that means a lot more data and a lot more granularity to be able to have some certainty about the value that you're going to put on a business and the value that you're going to get coming out of it. Because at the end of the day, let's face it, you can make an acquisition for strategic purposes, and that's great. But the ideal is that when you make an acquisition, you ideally want 1 + 1 to equal at least 3, if not 4. And so you're looking for value creation. And the only way that that can really be resolved now is by greater granulation, greater insight, and greater focus on the due diligence process, and then carrying that through into the post-deal integration where you're actually making that, achieving that value creation.
Following on from that, if I may, thank you, Robert. Again, from my practical perspective, you're able to look at a business in a particular market sector, regardless of what it was or what it is. And you're able to sort of ascertain that you would look at the revenue or you look at the EBITDA and you say, okay, the market rate's a multiple of X. And that would be almost the starting point of your DD. And then you'd start, then you'd agree. And that was, but I've shaken hands on deals like that without looking at the rest of it, because you knew what the multiple was in the marketplace. And the rest within CUI, to use an expression, would be okay, right? And to Robert's point, he's absolutely right. That no longer can be used because there is no market pricing as such. You're either dead in the water, like hospitality and retail, or there's something else. But you've really got to go now into the absolute minutiae of the business, to every aspect of it, in a data manner by way of technology, using technology to verify the bona fides of the company. Then you worry about the valuation. If the whole thing's been turned on its ear.
Yep.
Is that a fair comment, Robert? Do you agree with that?
No, absolutely. I mean, the piece Terence has just talked about is still very important. So when you're going to make a deal, the financial and the legal aspects need to stack up. So you do that first, and you tick the box. And as Terence said, there were days where that was adequate. It was a strategic purpose, and you sort of knew that you were going to get your value moving forward anyway. Right? Gone. That's not available anymore. So on top of that, you've got to do the operational and commercial due diligence, and that's going to take longer. It needs more granularity, and it's going to be a critical component of deal closure.
Okay. And it needs to be bona fide. You can't just do it by the seat of your pants. You've got to do it in a disciplined and technology-based discipline, if you will, as opposed to an army of accountants. You've really got to have, the process and the software to make it work properly.
And on that basis, then, if that's the case, and obviously there's a little bit of ambiguity and uncertainty, and more due diligence required, and obviously you're quite clear about the importance of data. Do you feel, Terence, do you feel that the industry is in a good place for dealing with a surge over and above what perhaps the normal run rate that it would have been expected? And are organisations geared to understanding the need for greater technology, greater data-led approaches, do you feel?
I think, well, to answer the latter first, I think that people understand, I believe people understand the necessity for that granular detail, for that minutia, for that examination to be far, far tougher, if you will, than it's been in the past. And they're going to take, deals will take, back to Robert's point, deals will take longer to actually finalise, if indeed they get finalised at all. And that's the other interesting thing. I think the dropout rate of these things are going to grow, frankly. The numbers, from a numbers perspective, you hear private equity guys, talk about X number of deals over a 3-month period, 90-day period. They've got this sort of pipeline. It's all out the window. It's not working. Now, is there going to be a rush? Is there going to be an overload? I don't think so. But if there is, I believe there are the tools there in the marketplace to systemize process. And there will be requirement for greater process, as opposed to my earlier comment of by the seat of the pants. There's going to be a great demand for that. But I don't see them being in a situation where it's going to be rushed off their feet, so to speak.
Okay.
One offsets the other.
Robert, what's your view?
One of the things that's changed in the last 6 months or so is that a lot of the big boys that were doing M&A, they would previously use juniors to do all the number crunching and the analysis. And there'd be an office full of them. Now, if you've been watching the press, every one of the big four have laid off thousands of people in the last few months. So that luxury is not there anymore. Right? And the other thing is that the challenge that presents is that when you do use juniors, and yeah, it's a great learning curve for people coming into the industry, but a junior will go away, crunch a load of data, present you with an analysis and give you fancy graphs and presentations. But once you've got that information, you're sitting there and you're going, okay, that's great, but what happens if I do this, this, and this? You've got to go back into those juniors again, and they've got to recrunch the numbers again and bring you the new data back out again. And that's a time lag you can't afford anymore. And also, of course, clients, people that are dealing with M&A on a full-time basis, they're not going to pay those sort of fees that are being charged out for juniors. So we need a more efficient way of getting hold of that data, being able to manipulate it in every possible way you can. And that's where technology plays a strong role. I'm in agreement with Terence. Is there going to be a surge and a sudden high number of deals? I don't think we know. I don't think anybody's got that crystal ball. But what I do believe is that there'll be spot deals where somebody sees a steal straight away and they just swoop in, grab it, and go. That's it. And they'll and when they've done it, they'll park it. They won't do anything with it. They'll just acquire it, park it, and then wait for better times. So there's going to be an uptake in that. But those will just be
opportunistic buy, isn't it?
Yeah,
they'll almost be telephone calls, Terence. I reckon. That's it.
I'm having a few now.
Yeah. Look, there's a friend of mine. He's struggling. He's in a particular business. I won't mention what it is. His business is worth probably 5 mil, right? And literally got a phone call overnight, and somebody said, "I'll offer you 7." Right? And he bit their hand off. Yeah. And there was literally an email followed with an attached document. He printed it out, filled it in, signed it, and that was it.
Yeah.
They're the best deals.
They will. This is the thing, though. We're going to see a polarization.
Yeah.
Those deals will be taking place. They're quick, easy pickups, right? The rest of it is going to take much longer. People are going to be
and I think that's
more diligent.
But that's where, to your point, and it's a very valid point, and I probably read the same article, there's 4,000 or 5,000 people in Sydney and Melbourne alone that have been laid off from the Ernst & Youngs and the larger PwCs and so on. They were doing the grunt work previously. The deals will still occur, but that grunt work will need to be done by data. By the disciplined data process. And then formulated in such a manner, those seat of the pant deals, they happen, but there's an SME sort of size. A large public company of circa a $500 million isn't going to be done over a bloody cup of coffee or whatever. You know, those days of Alan Bond have gone, thank God. But they will need to have a very process-oriented, disciplined approach.
And I think that's to say
you've just made a good point, Terence, and that is that those deals that are a steal, let's call it that for a minute, you know, the quick and dirty ones, they're going to be in the lower numbers. They're the $10 million, $20 million deals. Once you start to get above 50 mil and upwards, that's where people, irrespective,
you've got lenders, you've got all sorts of
exactly. That's where everyone's going to start saying, "Hang on a minute, we need to go down to a level of granularity."
I think that's sorry, I'm talking across you, but that
no, please go.
Is actually the real. You're right. It is the real point. There is a certain size where deals will be done. Let's call them steals, and they're based on relationships and all sorts of different things. But anything above 50 million or a capital base of 100, be it public or be it private, there will be shareholders, there will be bankers, there will be other players that are part of that decision process, and they're not going to accept across the table handshake over a cup of coffee. They want evaluations, they want data, they want it verified, they want it verification, not once, but probably half a dozen times before they're comfortable. I deal with the banks all the time for businesses that I work for the banks half the time, and I know the due diligence that they go through. And it's severe because they're investing other people's money. It's the old adage of you never got fired for buying IBM. No. Or, so similarly with banks, you do get fired if you lend to the wrong person.
I think that's a very good position.
Maximized.
Yeah, thanks, guys. I think that's a good time to bring Matt in. So thanks for your patience, Matt. So you're involved in that intersection of M&A and technology and data, and perhaps you can give us a brief insight as to what you're seeing and whether what you're seeing and what people are coming to you with is lined up with what the guys' views are. They're saying you can't have a crystal ball. I quite agree, but these guys obviously are very good at forecasting where things may well go. What are your thoughts?
Yeah, so some very good points around, if suddenly you don't have any juniors, you need technology to pick up the slack. And of course, while the big consultancies do have juniors, they're less likely to want to bring in all-encompassing tools, because of course you can farm out fewer days than you can do using your juniors. So it's an interesting point around in the short term about possibly the increased use of technology. But I think there's some broader themes to discuss as well around this, and these themes really have been going on for many years around nobody's just buying bricks and mortar anymore. So if I'm buying Facebook, which unfortunately I'm not in a position to do right now, but hopefully someday, it's customer data that's important. It's understanding what that sales pipeline looks like. You're also buying a brand, and importantly, you also want to learn about customer sentiment. So these are all a load of things that it's not so quite as easy as sort of valuing, as bricks and mortar would be. And really, the only way of assessing data with that level of complexity and with that level of data is using technology. And what we're seeing right now is some really innovative use of technology, especially with what we're working on at AIM within the past few months. And we're seeing customers come to us and say, look, we're really interested in working out the valuation of this data. What does this actually mean to me? If I'm buying this acquisition, what is the valuation of that customer data? And I think probably one of the most interesting use cases, because I'll try not to go through all of them, is around what I mentioned earlier around customer sentiment. Now, very important, of course, when you're buying a business, that when you're looking at the pipeline, if you've got poor customer sentiment, customers are unhappy, that pipeline's worthless. No one's going to be renewing, right? So that pipeline of renewals means nothing to you. And what people are doing at the moment is, imagine where you've got a company and they've been surveying their customers for decades. That's great, right? Because you have a good understanding of sentiment. But actually, maybe not. And the reason for that is that when you send out a survey to your customers, you're probably lucky if you get 5%, hit rate or 5% returns of those surveys. So you're only really looking at a very small proportion. However, a lot of customers are getting in touch with the organizations that they work with. They have phone calls, they send text messages, WhatsApp now, Facebook messages, emails, and the like. And we're using technology now to use AI to look at all of those different customer interactions and then actually come up with a customer sentiment score and actually come up with a net promoter score, basically. So here's our customer, Matt Smith. He said these words. He's made these types of phone calls. We can analyze those phone calls as well and understand based on Matt's tone of voice as well what his sentiment is. So I think it's use cases like that that are coming up more recently that are really important. And of course, you can only do that with technology. Even if you had a room full of juniors, they're never going to be able to go through the past 10 years of customer interaction and come up with some form of accurate sentiment score.
So that's an interesting, perhaps slightly wider field approach that you're seeing happening. What about more mainstream areas? You know, for example, cybersecurity, data protection, compliance posture. Are they equally important, or as you say, are people looking at more innovative ways to get an angle on the value of the data that a business has? Because I think your point there is that obviously data is such an important resource in any organization. Now, if you don't have data, there's nothing you can do. And as I think it was Robert who said the other day, it's not like a bank whereby, if you lose something, you can go and get a loan out. If you lost all your data, it's very, very difficult to recover that. So are you seeing the other mainstream requirements being equally important in looking at the position, value, resilience perhaps of an organization?
I mean, they're certainly equally important. Nobody's just going to focus on the valuation of the data and then ignore things like cybersecurity, data protection, compliance, regulatory compliance. But I think they're important in different ways. So I kind of see data as having the kind of two types of data. The data that's definitely worth something and will actually impact the valuation of a deal. And then data that kind of doesn't, but it's still important in a different way. So if I just explain that, as we were talking about before, if I'm buying Facebook, I want to look at all that customer data. It's got a valuation associated with it, and that's going to contribute to how much I'm going to want to pay to buy that company. I think when it comes to cybersecurity, data protection, if I look at that organization and say, you know what, they're really secure, they've got some good processes, systems in place. I've done a check on their data, where it's located, the type of data it is, and indeed it's regulatory compliant. I don't think that's necessarily going to drive up or down the valuation in the same way. I think it's more likely that would either be sort of allow the deal to go ahead or not. So if that cybersecurity posture is terrible, all their data is not regulatory compliant, so I'm going to be hit with fines in the future, or I'm going to have to spend millions on getting, DPOs in and sort of tech whizzes to sort that data out. So I think it's more around, it doesn't necessarily increase or decrease the valuation, but it just may or may not allow that deal to go ahead. So that's where I see you've got broadly these two different types of data.
Thanks for that. And Robert, you mentioned about skills gaps and the juniors and the need for increasing due diligence. So as due diligence arguably goes up, the guys who used to be doing it go down. Do you see any other skills gaps in the M&A life cycle starting to pop up or may happen in the future?
I'm not sure about skills gap. I'm going to suggest skill opportunity. So and I'm going to generalize here. So if you take a look at what would happen with a normal deal, somebody would be looking to make an acquisition. A whole group of people will be tasked with doing an analytical work on that and coming up with the data and the numbers and the visibility. And then that would guide your thought processes. What I think is going to happen is those people are going to move from being operational people to more strategic. So the data will be generated through technologies like data mining and AI and things of that nature. And those people that were traditionally doing classic analyst work will either go by the wayside, or they will move upwards in the chain and they will start to be providing more holistic insights and more strategic insights to the people that are going to write the check. So that's my thoughts. I think other than that, there's going to be more. There's going to be a skill shortage in the due diligence area. So when you actually get to operational and commercial due diligence, that's not a desk-based job. You're now starting to look at all the moving parts of the business, and you're going to need people in there that really know the industry inside and out. And I think there's going to be possibly a shortage in those skill sets as we go forward.
Okay. Just a comment has come up from Krishnan, who's adding to the discussion in relation to other aspects which are increasingly important. So building on the points of the guys just previously, and he says intangibles which cannot be quantified, for example, like the culture of the two organisations, maybe whistleblowers and trouble mongers, which is a great phrase, a trouble monger. I totally agree. Any Terence, Robert, any experience where again those factors have been important to you in past deals?
Let me start off, Krishnan. Thanks for your question and your observations. You're spot on. One of the absolute showstoppers is culture, right? And that is a critical area for a business. I'm not going to go into detail, but I can think of one deal in the past couple of years that was very important for the acquiring business, but the cultures of the two organizations were so widely different that the deal still isn't working properly, and it still hasn't shown any value. In fact, it's heading towards it being a complete disaster. So back to those intangibles, and I'll just throw one more in as well. Technology, we talked about that being a prime area for acquisition. Well, the problem with technology, particularly software, is you can't pick it up. It's that's physical, but software isn't. And so it's very, very important when you're making a technology acquisition that you actually get right down to the IP. Where is the IP? And it's normally in the code of the software. So you want to see that that code's real, and you also want to see that that code is of a high enough quality that that product has got go-to-market potential. So I thank you for your question, Krishnan. That's good insights.
Terence, anything to add to that?
I agree on both those points that Robert's made. The culture is one that I've certainly experienced, both positive and the negative. So that is an intangible, certainly, but it can be an absolute showstopper. When you get it right, it's an absolute whiz bang. It's an absolute, it's a wonder. You get the right chemistry of people together who want to take their respective businesses to the next stage and can see it. And there's a great track record of a number of companies of that ilk. Microsoft today, with all those various things they bought, I think of Lotus Notes, many others, they were acquired and bolted on. It became much bigger, and there were some cultural issues, but not too many. On the other side, I agree again. I've bought and sold software companies, and it's a nightmare, an absolute nightmare, because you're never quite sure if the code is real, and the code is owned by you.
Yeah.
And so there's some real issues there.
Okay. Good.
Anyway.
I'm just starting to launch the first question for people to vote on. Now you've heard from the guys that their view is possibly a surge may well be there. A little bit difficult to predict right now, but if I just launch this, and hopefully this should allow you to vote, those who are currently joining us, and we should see those numbers come up shortly. We have a little while for that one. Matt, so in terms of the technology side that you mentioned, obviously you've been going over different ways in which that's being used. The monetization side of data, are you seeing people coming along with that infonomics agenda, whereby again they're starting to look at the value that I'm acquiring from an organization. Not only is it in good shape, is this a well-run organization with a good posture, and we're not going to be buying something that causes us problems, but are they also looking at how maybe that data could be valued? It could be potentially, subject, of course, to data protection and all the other controls on it, but actually be used for greater insight, better knowledge of customers, maybe even using that data to sell within their industry, or maybe to their suppliers or customers. Are you seeing that as well?
Yeah, we are. I mean, the interesting thing about the monetization of data is, it's relatively straightforward to say a customer record or this and that is worth a certain pence or pounds or dollars number. But then once you've got that sort of baseline figure, you of course need to know, well, how much of that stuff do you actually have? And I think that's the tricky thing with organizations. If you've got a single sort of CRM system that contains all your customer data, all of your customer interactions and the like, that's relatively straightforward. But we're seeing more and more, and we always have done, that is no longer the case, and I guess never has been the case, where you've got a company with a single CRM, and that's all nice and easy. You've got access to that data, and it's all in a readable format that allows for analysis. And I think that the real struggle and the challenge, and this is where technology is being used, is to, in effect, send out your sort of AI-enabled data crawlers to capture all of that information and then index it into a single database for analysis. So if you've got 10 different CRM systems with different customer data in, it's no longer a case of just exporting that data and saying you've got 10 times 100 customers. You're going to have duplicates in those. Some of those customer records are going to be incomplete, so they're going to be worth less than others. And so what we're doing a lot of is using technology to look at all that data sort of holistically across the board within an organization, work out where your duplicates exist, even do some merging as well to actually improve the valuation of any single customer record that you have. And then doing an assessment based on completion. So not only do we do assessments based on sort of regulatory compliance, but actually saying, a good customer record looks like this, a bad customer record looks like this in terms of data completion. And then providing a report that basically says, you're telling us that your customer records are worth this, for each one. Actually, you need to consider the quality of those records, and maybe that organization's sitting at 50% data quality. So you've got 1,000 records that are great, 1,000 records that are not so great. And so that's what we're seeing a lot more now, not around just valuing a single piece of data and then multiplying it by how many of that you have, but going down to the granular level of detail and actually including completeness into that calculation.
Okay. And a question just has come through from Johan, Rob, and I saw you put your hand up. You want to actually deal with that one?
Yeah, well, I think it's probably a good segue into one of the questions we're going to talk about shortly, which is how can technology assist with strategic targeting? Thanks for your question, Johan. From my point of view, in the pre-deal process, you want to be able to quickly assess the value of what you're buying and to be able to make a sound decision, because at the end of the day, you're acting for your board and your shareholders, so you don't want to get it wrong. So technology-driven data can put that information at your fingertips. And of course, it's never a one-stop process. You start to take a look at a business, and your first pass reaction says, yes, that's a good business, we should go ahead with a deal. Your next question is, well, what are we going to do with it when we've got it, and what does that impact have on how this business is running now? So there's a lot of what ifs start to come into even the pre-deal process. And then of course that itself fuels the deal process in terms of how you negotiate, what you're likely to pay for that business, even some of the conditions about it. And of course it then flows through to the post-deal period, where you ideally want to start using that data as the foundation on which you're going to start driving value creation. So the great thing about technology-assisted data, and I'm going to put a proviso on this, data, whether it's produced by an analyst or produced by an artificial intelligence piece of software, you put crap in, you'll get crap out. That's not going to change. But assuming that we've got good quality data at our fingertips, the beauty that technology allows you to follow through with is you get one source of truth, one point of accurate data, and that data flows all the way through the M&A life cycle, from pre-deal through deal through post-deal, and through to ongoing operation of the business.
Okay, and the follow-up from... Sorry,
So
Rob.
I hope that's answered Johan's question.
And the follow-up from Mr. Raja is around how, therefore, do we value if we can't easily visualize the impact of data on hand for companies by putting the two together. Any views on that, Robert, Terence? And I'll move on to Matt.
I'll make a quick answer. I mean, bottom line, if you're not relying on accurate data, and you haven't got, sometimes you don't, right? Sometimes you haven't got access to that data. Sometimes the deal that you're doing might be competitive, it might be hostile, and you haven't got access to the sort of data that you'd like to have to. And if that's the case, you're left with two tools. Well, three. One, your finger, two, the wind, and three, a crystal ball.
Yeah.
Because that's about as good as you're going to get. And that's where you come back then to people like Terence, who have had experience and been through this process before, and they're basically on the line and need to make a call as to whether you go or don't go on a deal, often based on an incomplete set of data, and that's not a nice place to be in.
Yeah, it's a very valid point, and you're absolutely right. It comes down to that situation, and I like the finger and the crystal ball. What was the other one?
The wind.
Wind. That's right. Yeah. But it's true. It's true, and you can, we've been through this many times. You can analyze something to death. And it's important you do. But in the end, I notice here from Anthony Hanley, much of the data in organizations is invisible: work activities, vision, strategy, culture, blah, blah, blah. These are things which you find difficult putting a financial outcome on. That's absolutely right. This is what Robert's talking about. And you've got to then move on from that. And you've got to say, okay, what do I believe this thing's worth? What are the risks I've got? Commercial risks? Are they external? Are they internal? Do I have enough faith in what I've got if I'm going to aggregate the two organizations? Do I have enough faith in my own systems and processes and so on to be able to merge the revenue and everything else and discard other things? They're all factors that you weigh up as part of the process. And it really does, it really is, and forgive me for being so bland, but it really does come down to the seat of your pants, and years of experience. And I've had many, many sleepless nights over many, many years of have I done the right thing, and only time will tell sometimes, because you can't put a value on it,
I might add to Anthony's question if I can, Steve, if we've got time.
Of course, yes, I think we have another couple of minutes.
He's absolutely spot on. There are many things that are invisible to an organization: work activities, vision, strategy, culture, etc. That's why, moving forward past this COVID-19, that's why there's going to be a greater focus on operational and commercial due diligence. And what I'll say in response to Anthony is, and I'll say this to everybody else, when you walk into a business, you can feel that business. You get a vibe. You can feel whether it's dynamic or whether it's flat on its feet. And that is a barometer that you carry, and you're not born with it. You actually learn it having done many, many of these situations previously. And so, from my point of view, all of the numbers and the data that you've got should help you so that when you then go and do operational and commercial DD, you look at those invisible factors and you use that in conjunction with the data that you've got available, and it should help you make a more rational and more decisive decision about the deal.
And that's the point. You have to have the information around you. I was just doing it physically in my mind there. You're in a bath full of data and information, but you must have it, you must review it. Ultimately, you then got to stand up and make that call, but you can't do it without the data. It's impossible. You'll make an absolute ass of it, you know.
Yep.
And
the data is the prerequisite to validating something.
Yeah.
So,
correct.
Simple comparison. Imagine going out to buy a house, right? And before you go, you've got all this data, and somebody says they want 3 million for the house. And you pull up outside in the street, you get out your car, you take one look at the house, and you think, I must have got the wrong address. This isn't worth 3 million. Right. What you're doing is you're using the data that you've got available, and then you're bringing your experience in on top of that to validate your decision.
Yeah, good analogy. Good analogy. Yeah,
and Matt, just over to you on that point. And I should say to everybody, I've been firing off the second poll, and I'll come back on that at the end in terms of how people have been responding. And there's one final one around technology, which I will launch very, very quickly. But Matt, given the intangibles, you mentioned about an intangible, for example, of customer experience, perhaps. What sort of influence is that going to have on the long term health of an organization if I'm looking to buy, alternative looking to sell? Are you getting, in the technology side, are you getting increasingly shall we say sophisticated metrics then being demanded of you? Are you sort of creating all sorts of dashboards with all these sorts of ratings on there, which are not just looking at mainstream, but obviously looking at all these other intangibles as well, and if you can mine that data out of an organization?
Yeah, I mean, what we're talking about here with the intangibles, and let's say vision, work activities, strategy, culture, indeed, as the tech guy, I'm going to want to say, oh yeah, we've got a solution for that. But as Rob says, sometimes you just need to walk in a place and get a feel for it. And I'm not going to pretend that technology is going to give you all the answers to those things. It could well do in the future. I think it's sort of analogous really to our customer sentiment discussion. Sort of 5 to 10 years ago, that just wasn't possible. And I think people would say, we need to survey. We can't use AI to work out how happy our customers are. And we now can. It could well be that, in the future, we've got metrics around culture, business process and the like. I still don't think that technology is going to completely get rid of somebody like Rob walking into a place and getting a feel for it. So it can provide you the data, as you said, to try and sort of feed into that discussion.
Yeah.
But indeed, I don't think it's ever going to completely, remove that sort of walking in, getting a feel, having a look at the house type thing.
Okay.
No, what it will do though is it will allow me to walk in later and spend less time there.
Yes.
So hopefully it's given me a more qualified view of the business before I even get there. And then what I'm doing is either validating for or against what the data is telling me.
Indeed. Yeah.
Okay, great. We've really come towards the end of our time now. So just to feedback on what the results of the poll have been so far. So it seems that everybody speaks with one voice, in that they're sort of expecting a surge, and they're pretty well prepared for that, which is good news. And when it came down to data and the importance of data, then 75% was saying it was important, and 25% was saying it's quite important. So everybody recognising that there is some big value understanding the data from an organisation. And then finally, as we're just finishing off on the final poll around use of technology, it seems again that medium use is out at lead, or low, or used rarely. So it would seem that there's possibly an opportunity for organisations to look at more technology to assisting with this analysis and due diligence. Very interesting. I'll share that very shortly. Guys, if I just go round to each of you again, Anthony has just made a final point again about the importance of knowing what you're measuring and going in with a very, very clear understanding of your metrics, which I think we all agree with. But if I start with you, Terence, would you like to do any final sort of comments before we wrap up, and then I'll pass to Rob and finally to Matt. Terence, any final views, any lasting comments you want to leave with the audience?
You're on mute, Terence.
Should we start with Rob?
There we go. I've got you.
Oh,
Thank
okay,
you.
back.
Sorry, my
Sorry,
apologies.
Terence.
Sorry, my fault. Sorry, again, simple question. Does technology, does data gathering, data analysis enable the activity of, for me, buying a business, acquiring a business, merging a business, whatever? The answer is categorically, absolutely yes. And indeed, Matt gave me an idea before about evaluating customer service levels and so on as a value. There are multiple levels and multiple ways of doing it. So yeah, it's an absolute necessity, absolutely critical as far as I'm concerned. You can't do it otherwise. You can't do it. I can make the commercial decision ultimately, but it's going to be based on something.
Sure.
Getting back to the house analogy, and that's the analysis, the data analysis, and it's critical.
Okay.
We don't have lots of Indians now, Indians being the young guys in all these large partnerships. They're currently looking for other jobs, unfortunately, but we've now got to rely on technology to give us what they once did manually. So it's critical. That's all I'm going to say.
Robert, what's your sort of leaving comments for the audience?
Speed and development of technology over the last 5 years has been absolutely rapid. We keep thinking it's got to slow down, but it never does. It always speeds up. From my point of view, one of the challenges that we had in M&A previously was it took far too long to get data-driven technology and AI implemented. By the time you'd actually gone through the process of getting it spun up and implemented and getting some meaningful data out of it was too late. You'd already closed the deal, run the business for 5 years and sold it again.
That's right. Yeah.
We are now in a position where those technologies can be readily put in place very quickly, and that's going to be the key. So if you've got a major deal and you can very quickly put that technology in place, pull the data, get some meaningful insights into the business, and use that to start driving pre-deal analysis, that's going to be the key. The speed of implementation is going to be the test to see how well that gets adopted.
Okay. And Matt, final comment from you.
Yeah, I'll leave you with a quotation. Now, I don't know the name of this person. It was somebody in the Victorian era said, everything that's going to be invented has already been invented. And how wrong they were. That was before, of course, planes, televisions, mobile phones. And I think what I'd like to encourage us all to do is to continue to innovate. And, we're getting some great questions around the intangibles. And I think there were some intangibles that we just couldn't have done 5 to 10 years ago that we can do now. And I think we as technology creators and users need to all input into this discussion and say, this is not possible. Let's see if we can make it possible. So I think that's going to be, at least at AIM, our focus for the next few years, seeing what we can do to not remove, walking in from the equation and getting a feel for something, but giving you the data for the intangibles so you spend less time doing that bit.
Okay, great.
Yep.
Guys, thank you very much indeed. We're at the end of our time. In fact, we've overrun by a little bit. So apologies and thanks for keeping with us, those who joined us today. First of all, I'd like to thank those who were able to attend today, and very, very grateful for your time and contribution. I'd also like to thank the panel for their insight and views, and hopefully that has been of use to those who have been on the webinar today, and we will notify you of other webinars in this sort of series if you'd like to join at some point. Just to add on top of that, we will create this, as I said, the questions will come out as a podcast, and to everybody who's registered, we will send you a link to where those are, and I'm sure contacts if you needed to contact us after the event or have any further questions, then of course we will actually deal with those as well. And the guys on the panel. But without further ado, again, thanks to the panel very much for your insight, to Rob, Terence, and to Matt, and wish everybody a good rest
Pleasure.
of day
Yeah,
wherever
pleasure.
you are, whether it's morning, afternoon, or evening. And look forward to meeting with you again soon. Thanks very much indeed.
Thank you all.
Pleasure. Thank you.
Thank you, Steve.
Thanks.